Welcome to Upside for the real stories behind the headlines affecting European venture. Joining today is Dilek from Scalex, Lomax from Outsized, Andrew from 7%, and myself, I'm Dan from SuperSeed. At last, not a wall of white dudes, I hear you say. This week, we're going to be looking back over the last 12 months of startup activity to then look forwards at trends and themes coming up for Europe in 25. Before digging into the Turkish scene, seeing we have Dilek with us, to view the world through her eyes. Now, Dilek is the founder and managing partner of Scalex Ventures. She's an accomplished founder, operator, and now VC. She's Turkish, the fund is based in the Netherlands, and they invest in B2B, AI, robotics, cyber, and all that cool stuff. Scalex also has a founder profit share scheme, so everyone benefits when somebody does well in the portfolio. Now, I've only seen a few VCs do that, and I think that's really, really cool. Dilek, thank you so much for joining us. How are you, and what has caught your eye in the news this week?
Thank you. It's amazing to be here. After listening so many episodes, it feels privileged.
There you go. You're the listener. Bless you.
So what caught my eye is actually the biggest one was Murati's seed fundraising from $10 billion valuation, $2 billion raising. And she got some of the top talent from OpenAI.
Nice.
No other day passes that it's heating up at the AI. It's getting more heating up. But also the Prime Minister of Albania, he wants to co-invest in this round. So that was my biggest
news. She's from Albania, right? Is that right, originally?
Yes, she's originally from Albania.
Cool. Lomax, what's been on your mind? What's caught your eye in the news?
Quite a few things caught my eye this week. So firstly, Synthesia, which is one of the companies we talked about before, which is a UK AI video generation platform, hit 100 million ARR, they announced, in conjunction with a partnership with Adobe. So this is interesting. You know, this company was last valued at 2 billion, raised over 335 million, is one of the most successful companies that's emerged in the latest AI wave from the UK. So great to see them hitting this milestone. So, you know, ring the bell. Awesome news. Somewhat weirdly and controversially, although perhaps not surprised by this, we've been talking a lot about defense spending, right, in the last, the last 3-4 episodes, especially given what's going on in Europe and the opening of the taps on European and UK defense budgets. And then we have the head of the EIF in an article with Sifted saying that they do not plan to be investing in weapons and ammunition. So, you know, one thing we've talked about is the need to invest in new defense tech solutions that Europe needs and the UK needs defense sovereignty on a lot of these technological propositions. And here we have the EIF. And the context here is that European Investment Fund is one of the biggest funders of European venture capital. So they invest in venture funds, which then, of course, invest in startups. Roughly 10% of the money in European venture funds comes from the EIF. So this is a huge impact. If we're talking about the taps being turned on for defense, now, we've also talked here that, you know, a lot of the defense tech money will go into logistics and infrastructure, but a lot of it will go into frontline battlefield tech. So we're actually saying, controversially, we're getting mixed messages from Europe here. We're saying, on the one hand, let's increase spending, but on the other hand is that, well, actually, the biggest LP in Europe is not going to be investing in a critical part of European defense infrastructure. So it's probably a classic European story. There's lots more to unpack.
Do you know if that's fixed, Lomax? Do you know if that's old new, as in old policy to be reviewed, or do you know if that's fixed?
I don't know. I mean, she came out and explicitly said this, so I think you can take that from the horse's mouth. I mean, one thing I've mentioned here before is that if you look in the LPAs, so the limited partnership agreements of funds, so the constitutions of venture funds, a lot of them ban a few things. You know, they ban typical stuff like sex, gambling. One of the things they've historically banned is weapons and ammunitions and guns. That was historically. So you would have thought, though, that going forwards, this might change. But, you know, you look at the biggest, like, you know, the most well-funded defense, you know, new prime in Europe, Helsing. I mean, they're developing drones, which I'm sure, you know, would count as weapons and frontline tech that, you know, may not be able to take money from venture funds backed by the EIF. So this is a bit shocking to me and a bit worrying.
I just wonder if it's just kinetics, though. Yeah. Sorry, carry on.
Could just be I guess some of it will come down to definition. And maybe that's where the detail will be, and maybe it's not so bad as we think. But I think I'm a bit shocked by it. It's mixed signaling from Europe here. In big tech, or as close as to what we have in big tech in Europe, ASML posted really strong results in Q1. But I think the eye-opening thing was that they have announced that Orders, which is a crucial measure and metric for future trading of the business, are down 20% on expectations. And as a reminder, ASML developing key critical equipment and machines for developing chips. And so what does this tell us? I think this is a result of tariffs, and the number of chips being manufactured globally is not going down, but I think it just reflects probably the sitting on hands or indecision that's taking place now while people try and figure out where the cards are going to, no pun intended, where the chips are going to fall in relation into tariffs, right?
Fall. You went there, didn't you? You went there. You did it.
Yeah, I saw it and went there. We talked about the Klarna IPO being pulled last week. Well, Figma have confidentially filed for an IPO, so we'll see what their S1, their registration document, says when it's published in due course. But that's interesting to see with, we're interesting to see with Klarna pulling their IPO recently and missing the window. Figma feel, despite all the madness that's going on, they have made the initial registration to take the first steps towards an IPO, which bucks the trend at the moment. So. Fair play to them.
Because I saw that 1,5 pulled their, like Klarna, they pulled their timing. So the German energy business, they're not going to IPO. They said they're going to shelve their US IPO plans. So interesting that Figma are going to go for it.
Well, they must feel really robust about the numbers under the hood. I mean, we talked here before about the 20 billion acquisition from Adobe, which was ultimately kiboshed by the FTC. But that company must have really robust numbers if they feel they can get this away in this environment. So good for them. And then the other thing that's happened a lot last week is the US dollar has been dropping big time, right? I guess, Dan, I think you talked about this last pod. I think this is something that we think probably Trump maybe wanted this, right? It's better for US exports, makes the dollar cheaper. Yeah. I'm thinking of the impact on VC land and tech in Europe. It's probably good for European stocks. And so it may mean that there's a bit of a rotation there. Probably bad, though, given that a lot of our markups potentially come from US VCs, and suddenly, our deals have come a bit more expensive, which may mean that, they're willing to offer, slightly lower prices. I mean, this is all in the kind of 5, 10, 15% range. So it doesn't move the needle massively in the venture world, but it's still important nonetheless.
Well, let's see what happens. I mean, who knows what's going to happen tomorrow, right? It's all just so bloody volatile. Andrew, what's been catching your eyes? What's new with you?
Well, I saw that the UK government's been lobbying to get a chunk of the Stargate project, which is the big infrastructure play between OpenAI, Oracle, Japan, SoftBank, and MGX. And this is about building, huge AI hyperscale data centers. I think France and Germany are sort of in the running for that as well. But really to reflect Lomax's point, we kind of should be doing this ourselves, right? So it's great, obviously, that inward investment would happen. And I hope the UK gets the deal. If it comes this way, but also we kind of just need to match this stuff ourselves. If we unless we want to become a back garden subsidiary of the US.
By the way, Stargate is a $500 billion project. We talked about it last week on the pod. 40 billion is what goes into European venture every year. I get it. This is infrastructure. This is not like software and biotech and actual early stage startups, but it's still, these numbers are absolutely huge, right? But surely, in the UK. What's going on in data centers in Turkey, by the way, Dilek? Is there a huge investment there at the moment, or?
Yes, it's growing really fast in this volatile environment, but definitely. Especially the government requires you to localize all your servers, which requires a lot of investment.
Do they?
Extra investment.
Interesting.
Okay.
Interesting.
I think the difference is, though, this is a bit like sort of, the telephone coming of age whenever it did at the beginning of the 1900s, and then going, oh, we'll just let someone else control our telephone network and everything else. It's that fundamental. So I think,
Dilek, you also had some news on Hugging Face, didn't you?
Yes, I do have some big news because Hugging Face just acquired a French humanoid startup. It caught my eye because, after open source AI models, now they want to jump into the physical world. And they already had a project with them last year. I believe inflection point in humanoids are coming up. Elon Musk, he wants to sell the Optimus for $20K. But we know bill of material is around like $50K now. So I'm watching closely all the humanoids or robotics companies now.
It irons very slowly, apparently. Apparently, I was told all those videos that we see it like ironing and then folding. Apparently, it's very slow. So it's a fraction of the video speed, allegedly. I don't know whether they've improved that since they came out last year. But I was like, wow, that's amazing. Someone said, no, it's sped up 10 times. So it's like,
Andrew, did you see the camera? They've got a new Boston Robotics camera guy, and it made me think of you because the actual humanoid was moving really slowly with this kind of I don't know what they're called. Those camera bodies that keep the camera steady. Not steady cams. They've got a proper name, haven't they? But so he was moving so slowly, it just reminded me of you, Andrew, because it was like, oh, of course, there you go. They don't need to be doing backflips or doing really, really fast ironing. So fair enough. I've got a few things that caught my eye this week. You may have seen somebody has hacked the crosswalk buttons in Menlo Park, so over in the Bay. It's not particularly European, but it made me smile. And they put Mark Zuckerberg's voices when you push the button. If you're blind, this voice comes on. So I will play it now. So they've got Elon Musk, they've got Mark Zuckerberg, and it's very, very funny. And it's not obviously rude, but it's obviously taking the mick out of all of them. And there's a new Finnish startup hub. It's breaking new ground. It's called Maria 01, and it means that by 2028 in Helsinki, they'll have a 70,000 square foot startup co-working space. So maybe off the back of Slush or other kind of views now on Finland. I thought it's just a really cool thing. They've already got 200 odd startups in their 20,000 square foot space. So they're adding another 50,000 square foot there. So good for them.
It's the French Paris playbook, right? I mean, they're just taking the sort of cookie cut from Station F, in Paris. So
whatever happened to Silicon Roundabout? Did Cameron kill that when he turned up, and did that all just die? Because we were going to be doing a UK version of this like 15 years ago. Does anyone remember?
I think everyone decided that Soho was a better place to have an office than the stinky old Shoreditch. No, isn't that what happened?
The VC certainly did. Yeah.
I think the only people there still are like HSB and Innovation Banking over in Finsbury Square. I don't know.
I'm pretty sure. I remember David Cameron turning up to something, and I remember thinking to myself at the time, anytime somebody from government turns up at a cool, like underground, super duper startup hub, it's going to be absolutely stone dead. So maybe
every time I go clubbing, Dan, all those nights out, those Monday nights out clubbing, if I see David Cameron there, I never go to the club again.
But you're 22, dude. You're young and cool. I want to do a big shout out to Northern Powerhouse 2. So another kind of UK tick. So they've invested 80 million into more than 200 firms up north. Obviously, London is the epicenter. Rightly or wrongly, happily or unhappily, London is very much the epicenter. So it's really great to see more regional activity and some money going out to other businesses up north and to other regions. And we've already talked about this, the IPO shelving, so I won't go into that. But I think my sense is we are still, even regardless of Figma, going to see fewer IPOs in London and fewer IPOs, obviously, in the States. But maybe the LSE will be able to take a bit of an uplift as the Americans are not doing so well. But we'll see. Maybe we'll get dragged down.
It's got a long way to claw its way back from. But yeah, quite possibly.
We got to be optimists, though, right, Lomax? We got to be optimists.
Of course. Maria's interesting. I mean, look, down the road from where I am is the unicorn factory, right? I think it's a good reminder that proximity is very, very important. And obviously, we moved into this world of the COVID world of everything being remote, but we've definitely come back. The zeitgeist is now in person, and when you're building, yes, obviously we hiring remote teams, etc., but proximity can be is extremely important still, right? So interesting to see that in Finland.
I think we should get a London hub back in action.
And you know what Boris Johnson says? Not that I want to quote Boris Johnson on a tech podcast, but you know what he said? It's like nothing. Nothing proprinks like propinquity. It's a very Johnsonian thing to say, but it's very true. It's a sort of capture the serendipity of
structure for the quote. He's stolen the whole. I don't know what they're called when you top and tail the thing with the same thing.
He's not known for his originality. I was with a friend who did some speaking engagements with him. And he said basically he ruffles the hair and does the whole show before he goes on stage. Talks really normally, chat, and then becomes a pastiche of himself before he goes on stage. So anyway, I think he's still far away out of politics. Right, I want to talk. I've got a couple of reports that I want to go through. I don't want to focus too much on the detail, although I am going to tee both up. And then I want to talk about some Turkish stuff with you, Dilek. But to start with, Deal Room and HSBC. Now they've launched their Q1 report, titled UK Innovation Update. I've always struggled with the word innovation. It kind of feels like one of those corporate, I was going to swear then, but I won't, corporate silly words where there's a room over there where all the innovation happens in that room over there. It kind of just feels a bit of an odd word or an odd phrase. So
a bit terribly 90s, isn't it?
it just doesn't feel
It's a bit
quite
like
right.
your grandpa or your grandma or something. Yeah.
Yeah, let's go and innovate. Let's go and
Overused.
innovate.
You must have very cool grandpa or grandpa, Lomax.
Well, yeah.
Let's give. I'm going to give you some key stats, and then I think I'm going to hand over to Andrew. But some key stats from the report. So 4.2 billion raised by UK startups, and it's always odd that we use a dollar sign. So even though it's a UK report, we're still talking in 4.2 billion dollars. Another weirdness. Health techs are leading the way, but these are super concentrated deals. And the other kind of key stat from the report is that since 2000, the UK has been basically the leading European tech hub by any measure. So we're still quite up front there. So what stood out to you? What does this mean for the rest of the year? What trends and themes should we focus on? My key takeaway, it's a sign of a maturing ecosystem when you get the founder flywheel. So the recycling has started. We've got Snick, Wise, Deliveroo, Revolut, Mafia. That whole founder mafia piece is starting to happen, which I think is great. The UK has roughly 3 times more unicorns than Germany and 5 times as many as France. So the UK is still up front, but they're catching up. And we mustn't dismiss Netherlands, Sweden, Scandi. Maybe, Dilek, you can talk a bit maybe about the Netherlandish, the Dutchies. Europe is waking up. However, we're still 5 to 10 times smaller than the US, depending on which metrics you look at. So we're still a long way behind, even though we're growing faster. IPOs have stalled. We've kind of gone into this for obvious reasons, but we'll see what the LSE does later this year. Andrew, what made you stop and read?
2 positive bits I took away was, for those of us raising a fund, uptick in VC actually funding, so both outflow and inflow is good. But the main thing that I was more sort of excited about, because it's been my hobby horse for so long, is the beginning of a rise of these breakout rounds. So these breakout stage rounds, like $15 to $100 million rounds. You know, we had, I think, 6 mega rounds at quotes of over 100 million each. And this is really the way you make this ecosystem sustainable, with this sort of strong middle stage funding signals and conviction in UK ventures, and that flywheel needs to really spin. We still don't have the number of rounds we need, and the capital still isn't available there, but it's starting, and that's really good, because if we get some conviction there, other people will follow. So as we know, even in VC, it's hugely a sentiment game. So that was just, finally we're getting some bigger tickets, like actually, and the companies are not automatically having to jump ship Series A or Series B to the US. A lot of them still will have to, but it's we just need more of the same. We've got to get this, same as we say every week on this podcast, we have to get these mansion house pension rules, like more.
We're going to wave fists, aren't we? Wave fists.
Where's our $500 million hyper data center? Maybe it's happening. Maybe it's happening.
Well,
I'm trying to be positive for a change.
I'm loving your renewed energy. I'm going with it. Dilek, what caught your eye in the report? I know it's very UK centric. What caught your eye?
So I was checking the UK report. The thing that caught my eye is the number one is healthcare investments or health tech investments.
Yeah, big.
That was a big thing for me, and really prominent startups are growing and doing really deep stuff. That was really cool to see.
Sorry to interrupt you, Dilek, though. That was half one round, wasn't it? Wasn't half of that isomorphic?
There
So
were
I
big.
don't know how.
Yeah, half of it's isomorphic.
And another one
isomorphic
too.
was 600 million, and Vidiva, which is 400 million. I mean, yeah, we can talk about it in a minute, but yeah, 1/4 of the 4 billion raised in the UK was those 2 deals, basically.
Which is still great. I mean, I agree with you. It's still hugely positive,
yeah.
right? It's a still huge conviction play for health AI. But apologies, I interrupted.
Yeah, I love it. And talent caught my eye too. Talent is always the biggest differentiator. At the report, I saw Ichaso, who is also our advisor. She was talking about the UK universities are being the biggest differentiator at the ecosystem. So those were good highlights.
Lomax, what kind of drew you in?
Can I be a dick now? Is that no?
Absolutely, go for it.
No. Look, I mean, look, we talked. So 1/4 of the 4 billion deals were isomorphic and Vidiva. They're both like relatively atypical. Firstly, it reflects what we talked about last week when we look at these reports. There's always like the power law applies in these reports. There's always 1 or 2 deals that win the day. It's slightly weird, this report, in that isomorphic is effectively a subsidiary of Alphabet, right? So while it's highly innovative and it was funded by VCs, mostly US VCs, it's a bit of an atypical venture deal. And Vidiva is a slightly weird biotech deal. I mean, it's in GLP-1s in a very hot area. It's basically an in-licensing of Chinese assets all-star biotech cap table of 400 million, but it's a little bit atypical. Fine. It does reflect the fact that, the UK has historically and still is very, very strong in biotech and fintech. And if you look at this report, especially they have a little bit in this report about the slated IPOs to come down the pipe in the UK. If you look at that list, Starling, Monzo, Lendable, Revolut, Blockchain.com, Accelerant, it's a very, very fintech heavy list, right? So I think if you look backwards over the last 10 years, where the UK has really, really been strong is fintech and biotech. But no one needs to, we don't need to be backwards looking in a forwards looking industry. So I think going forwards, we know there's a little bit more kind of broader, now we have the Synthesias, 11 Labs, Quantexa was mentioned in this report, raising a big round. So I think we're now kind of getting a broader base of software startups to complement what's happened in those areas. The biggest thing missing in this report, where's the liquidity? I don't even think there's a slide on liquidity in this report, right? It's all money in. What about the money out? And I think that's the biggest crisis really going on in European, in the venture market,
all
in
around
the US
the world.
and globally. Yeah, I think so. Yeah, I mean, the report we talked about last week did talk about the Wiz exit, the 33 billion exit to Google, which really moved the needle at the global level, which is great to see. But if you look at the numbers, and some of it we'll cover in the PitchBook report that we're going to talk about shortly, is it's very anemic at the exit level, which is very important, of course, for all of us as people who raise money, because there's a relatively fixed set of LPs, limited partners, who invest in venture funds. And if they're not receiving distributions from the funds in which they invest generated by exits and IPOs, then the ability for them to reinvest is obviously constrained. So that's definitely there's definitely a lot of capital built up in our industry at the moment that needs returning and recycling. So I'll be more excited when these reports have a little bit more on the exit side.
Yeah, I'm also concerned if mainly American public markets, but if public markets generally are struggling, that's going to just compound that whole liquidity challenge.
Exactly. We just talked about 2 European IPOs that were slated that have just been postponed. It's like those are big liquidity events, and a lot of the LPs that are in those companies are, or the GPs in those companies, they are European funds, and we need the liquidity.
Yeah, helpful for us as VCs raising money, but equally, some of these other companies raising money, you want them to keep going. You want them to go all the way. You kind of don't want them selling early. That's been Europe's problem for far too long, that they, people throw in the towel. So I want them to keep going.
No, but Andrew, the big but, I've got a big but and I cannot lie, is that at least that gets recycled, right? If you've got a little bit of M&A, you've got a little bit of liquidity coming on before public, at least that's being pushed back through the system. Yes, we want the biggies, but we kind of want it all. So maybe that's just being too...
I mean, seriously, Andrew, I get your point. And, kind of ride or die. You want companies to keep building and raising and build, hundreds of millions, billions in revenue, etc. That is certainly very, very important. But you need these liquidity fillers in the middle, right? So there's a separate PitchBook report that I was looking at recently that showed that in the last 4 years, there's been negative cash flow in venture, which means there's been more money coming in than more coming out. If you look at the 10 years before that, from 2011 to 2021, that's 10 years. That was more money coming out than coming in. So we had sort of positive cash flows, and the last 4 years have been hugely negative. And the exit part, you need those kind of interim exits to keep, you can get the big ones like the Whizzes, etc., which do just deliver a lot of capital back, but you need that recycling. It also means that you don't have the talent trapped. I think when you have these exits happen, it can actually unlock talent to then go out and spin out and set up their own companies. But of course, if they're going to leave anyway, they might leave anyway. But sometimes they feel more comfortable with a bit of liquidity in their pockets. You're shaking your head, Andrew. You don't agree?
I think, look, I mean, liquidity, you need a strategy as a fund manager to provide liquidity to your LPs. First thing is, obviously, I think when you get the really big companies that the flagship winners within an industry, take something like Anduril, take a SpaceX, or take, Flexport, any of those, the secondary markets are pretty healthy. You see a lot of trading after the Series C, the Series D, the Series E. We've traded some of the stock. I frequently get offers to buy stock. So there are, at that scale, there are plenty of buyers for those sort of assets to help move the liquidity around for those who need it, and transfer those assets to people who want the later stage and lower stage risk. But I think the problem that without having those companies, then you're always capping the total size of the market and the money that's willing to come into that market. So I don't want these companies that are doing these rounds, these few hundred million rounds to go in 5x and exit. I want them to keep going into the multi double-digit billion valuations. If that in itself restrains capital going back into the market, I think that doesn't matter, because I think the fact that those companies are demonstrating such success will pull other money away from other asset classes into the market in Europe. And it's not that Europe doesn't have the money. It's like this sort of myth that even in the UK that doesn't have the money, we're still like the second biggest financial center in the world. It's just the money goes not into tech. Institutions choose to put the money elsewhere, and they need to choose to see the dollar signs, brighter in tech, and that requires really big outcomes and really big businesses.
But it's all a bit out of sync, because last year we raised more into UK VC than ever before. It's like, I think it was nearly $13 billion. So yes, everything is kind of staging and flowing slightly out of sync. Maybe we can pull it in.
I don't disagree. You need big thing, but a healthy ecosystem has exits and liquidity all the way up the chain. I agree with you, Andrew. You need the big behemoth, lighthouse transactions to create and galvanize excitement and interest in the asset class. But I'm afraid you need liquidity on the way up.
Well, here you go. I'll do the opposite. I'll also argue that founders should exit earlier. There are a bunch of founders. There is a habit in Europe and UK, like a sort of dogged blindness to when you're not on a venture scale trajectory. And instead of recognizing that before the value drops out of your business and you become a sort of slightly dysfunctional lifestyle business, when you should actually sell, and founders don't sell. And that's partly because, sure, like trade sale in Europe and the UK is harder, but it's not impossible. And we see a lot of founders keep going, well past their sell by date in terms of the time for that business. And that business will never become a dragon, a unicorn, whatever, within the market, because they've missed the inflection point. And they should just accept defeat and flip the company before they run out of money, rather than sort of this slow death. And I think that's something that you see founders are far more comfortable with, because culturally in the US, people are far more comfortable with failure. And that's something that VCs should be more willing to encourage. And a little bit of a bitch about EIS and VCT. That's why I'm not keen on EIS and VCT funds, because often they'd much rather the company stay alive. They collect fees, they collect directors' fees, they get past the 3-year tax break. And it artificially encourages founders that should, after 18 months, go, we've not hit it, we're not going to win, so we should flip or fold and go again. And that's what I'd like to see more of. So I'll agree with you on both sides, Lomax.
Dilek, I want to bring you in also to give us the kind of, this is very UK-centric. I also want to kind of dip into your knowledge and see what the Turkish equivalents are. So I'm sure there are some parallels here and not.
Definitely depends on the cycle where we are and how experienced is the founders. I'll tell you a real story. I had a really good friend. He was only aiming for $50 million exit. Then he saw another founder selling at 600 million. Then his aim became like billion. So I think ecosystem also pulls up. It also comes with the learnings from the people around you. But I definitely believe it depends on the cycle. I love liquidity at this environment as a venture capitalist. Instead of having write-offs, I would like to have like 4, 5, or 6x returns at each company, but also look for that 100x's.
Maybe give us some more specifics from the Turkish ecosystem, because I know you kind of know this world pretty well.
Okay, actually, it's a really, really nascent market and young market comparing to a lot of European markets, especially UK. Imagine the closest one is Poland. They started 20 years before, in Germany 30 years before. So they are just getting have the first generation of billion-dollar exits around 2020. So it's mostly M&As. IPOs are rare comparing to UK, but definitely good M&As happening. And the good part is entry valuations are like 60% lower than US and 25% lower than UK usually. And they are really operationally efficient. For who?
Well,
yeah,
so
for early
might not be
stage
good.
ones.
That might not be a good thing, depending on what the cap table looks like afterwards, right?
Yeah, the thing is, I think there's one thing about this ecosystem. I would say one word that would tell it: resilience and the operational capital efficiency. So just to give you 2 examples, Peak Games, they just got 18 million investment, and the exit was 1.8 billion. And
Wow.
my co-founder, Berkay, he founded Upstream. He just got 10 million and made the exit at 300 million. So because they are capital
Fantastic.
efficient, they don't get that much money. I was playing on the numbers. $300 million exit kind of worth almost more than $1 billion exit in US, depending on the capital they raised. So
Wow. It's a very important point. Capital efficiency in venture is something people forget, and dilution. It's like, it's hugely important. We know roughly in Europe, in mainland Europe, in the UK, what do you have to raise? Roughly 350 million to get to $1 billion valuation. I bet you in Turkey, it's a lot more efficient.
yeah. Actually, our friends from Ulu Ventures, from Kaufman, he made a research about it. Usually it takes 80% dilution for a Silicon Valley success story from early stage till the exit. So it's a
I need
really
to
high
change my model.
dilution.
Okay.
But I do
Okay.
also wonder what is kind of this whole. I understand, managing cash and being efficient, but also just bloody going for it, and just that energy piece of just almost throw it at the wall. And I just can't help but think that Europe needs a little bit more of that attitude. But totally accept
Ambition.
capital efficiency is
Okay, I don't disagree on
not a
that.
bad
You
thing.
need that, but you also need GPs who can manage the middle of their book. Yeah, what I mean by that is there are, 10, 12 companies in the middle of the portfolio. If you've got a portfolio of 25, 30 companies that you could just sit there and do nothing about. Actually, I think often the contacts that we need are the M&A departments in all of these tech companies, and some of the innovation departments at the old economy companies, and you ring them up and you help effectively, negotiate a soft land, not even a soft landing exit, potentially a decent exit from anywhere from 10 to 150 million. I think that is our job. And so, some of the best GPs that I know and we know in the game are really, really good at that. It's something that I'm personally working on. It takes time to build these relationships and have the trust to be able to broker these transactions. It doesn't really work with bankers in our experience. I'm sure you guys have had the same thing, but I think that's a key skill set. And especially in leaner times like this, you can have the kind of longer term, shoot for the moonshot in your portfolio, but you need to be able to work the book and also help founders out, because this is still a very, very good result for them, right? If they can get the exits like that.
You leave the winners alone. You ignore the zombie dead wood, and you work on the middle bit. Exactly as you said.
If we're aiming to kind of take the money from LPs and anywhere between 3 to 5x, right? 5x would give you a kind of top decile fund. You can maybe get a half a turn of your book, of your fund, by doing this, or maybe even a whole turn potentially. So it's very, very valuable.
Dan, your comment around sort of more throw at the wall, and I agree with you. I think a lot of it depends on the company and the type of company and the market that they're operating in.
But
does it
really, really? I mean, is it not a case of just fucking go for it? Really? I mean, forget the market. Almost. Yeah. No. Again.
I mean, you're singing to the choir.
You're preaching to the converted. I mean, the pension managers in London are now like closing their checkbook.
No, they've just hit stop on the podcast.
just had a hernia. Yeah, just
the
through a
problem
schism.
is, though, surely so many, European and UK VCs, they sort of talk this game, but then they don't do it. Like they get cold feet. They don't do it. Some of them do.
Also,
some of them don't.
I mean, but keep in mind,
Why they
no
don't?
one really knows. Sorry, Dilek, go. Yeah, why don't they? Yeah, why? Yeah.
Yeah, why
Right.
don't they? I think it's
I
also
see.
the follow around. It's like having people support them along the way. Maybe I was in London and I was listening Synthesia founders. And obviously, when they need to have a bigger round, they need to go to the other side of the Atlantic. So it definitely has an impact. Or maybe the success stories are going to give them more push. Like I told you, in my ecosystem, those success stories always increase the target up and up.
It's great competitive tension for us as well, because as there are more VCs, the best founders will gravitate towards those who have got the stomach for it, and and the rest will get the dross. So as far as I'm concerned, it's all good. So we're good, Dan. We're on. We're all.
There we go. We win.
We're on brand.
Fine. I want to just dig into. Yes, it's another report, but we're gonna quickly fly through this. So this is the report from PitchBook. It's titled the 2024 Roundup. Now, 2024 feels like dog years, eons away ago, but this is a really interesting report. It's very rich, it's interesting, it's useful. Lots of data in context by country, city, sector over the last decade. So what it will enable us to do is kind of look back, pattern match, and then work out the themes and trends looking forward. I love they've got this kind of plotted data on a heat map, this kind of red to greens over what's happening over the last 10 years. It's very nicely done. I suggest you have a read. I'll put the link to the report in the comments. But Lomax, key takeaways from 24, and then more importantly, looking forwards into 25 for founders and funders. What were your key things?
I was less enthusiastic about this report than you, Dan, to be honest. I mean, maybe I've got report fatigue.
Yeah, we are. Do you know what? At least we've moved away from tariffs. Just be bloody thankful.
Now we're doing reports. But I think look, I mean, I've obviously got a bee in my bonnet about liquidity. This report had actually some information on liquidity, which is helpful, which at least shows they consider it. So one of my takeaways looking at the 2024 numbers was that, as you mentioned, Dan, roughly 16 billion of investments were made into the UK in venture, but headline 6 billion of exits, right? And actually a lot of that exits is going to be, share for share exits. It's not actually going to be cash. It's probably more like 2 to 3 in cash. So it goes into that point that we just talked about, that the cash flows into venture are higher than the cash flows out and have been for the last 4 years. And this is a major, major point that I sometimes think I clearly don't think it's covered enough in this material, because it's incredibly difficult. It makes it harder for the funds to raise money. If you look at this report, you see that the biggest funds raised were by the usual names in the UK market. So Accel, Atomico, Boulderton Index, because LPs have less capacity and headspace and nerve to focus on the slightly more entrepreneurial, snappy GPs such as ourselves, emerging manager types. So I think that is a consequence of the lack of liquidity in the system. Another thing that I thought was a really interesting piece of data in this report, so thank you, Dan, for highlighting it, is that it actually lists by entity the biggest LPs in investing in funds. So actually, if you're raising your fund, you could go and have a look at the biggest LPs.
Apart from government, very few repeats.
Yeah, so exactly. So, and the takeaway from that is, the top three are the British Business Bank, the European Investment Fund, and the British Patient Capital, which is an offshoot of the British Business Bank. So what's interesting is that from the peak of 150 new funds launched, which was in 2022, which we're not surprised about, the last 2 years have seen 50 funds launched, so a third of what it was at the peak. And what's interesting, slightly shockingly, from last year, so 51 new funds were launched. And if you add up the commitments into the UK venture funds in 2024 from the British Business Bank, British Patient Capital, and the European Investment Fund, it's 61 commitments. So, there's a lot of commitments. I know. So look, again, it goes back to the point that, a large proportion of European venture capital is still underwritten by the taxpayer, by the state. Mm-hmm. This is fine. This is the state of play. Well, it's not fine. Hopefully it will become less and less the case as the asset class becomes attractive to private capital. And this is the
But
aim
they are
of the
making money, Lomax. That's the other
this.
thing that I think people don't fully appreciate is there's a lot of also fist waving at the bank and at the British government for, playing with these risky startups. The funds are making money. Yes, there's a little bit of inertia baked in. We don't know what 24 and possibly 25.
Some of them are, and clearly some of them aren't sending any money back, right? So it's all paper money. So I don't know. I mean, I think that kind of investment, that's for a sovereign wealth fund, for governments to speculate with their own balance sheet. That's for a sovereign wealth fund. This is about market stimulation, isn't it? This is the hand of the government kind of coming in to stimulate the market, which is fine. But look, the European venture ecosystem is, 40 years behind the US. The US had a lot of government stimulation at the beginning. It's fine that this happens in Europe, but I think it needs to happen less and less, especially when you have unhelpful comments from, as highlighted at the beginning, where the EIF won't be investing in a large section of the the emerging defense tech sector. So those are my takeaways from the report. Going forward, look, there is a sort of small up and to the right element to this. There is more and more funding and more rounds getting done, bigger deals we just talked about. So I think it's better and rosier for 2025, and you can see that in the Q1 2025 numbers. So we are moving away from a big compression in our market, which happened in 2022, and we're clawing our way out. And once we've fixed the liquidity side a bit, I think we'll be in really, really good shape, which will happen. I wouldn't be doing this if I didn't believe otherwise.
Dilek, what did you think? Did you get
You
a
are
chance
thinking
to take
we
a
are
read of the
really
report?
moving out in 2025?
I'm not moving. No, I'm not moving. No, this is why I'm here. I'm staying.
Okay.
You're stuck with
No.
me.
You think,
You're stuck with me.
no, you think we are moving out from that depressed market in 2025?
That's a very good question. I mean, that was the optimist in me speaking. Yes, I think so. I think we're seeing, both in the US and Europe, I think there's room for optimism to what we're seeing. I think, the only slight thing that will blow that, which will dent investor confidence, is clearly we're seeing a lot of money being thrown without due diligence into AI startups, right? So, and I think we've seen this playbook before, and and venture funds with a lot of capital feel that the sort of menace of, or the downside of missing out on the next, multi-trillion-dollar company does not offset the, losing money in a bunch of rounds by not doing, or more than offsets, losing money by not doing enough diligence in a bunch of AI startups. So I think that potentially will dent investor confidence at some point when there's a bit of a shakedown in that industry, which there inevitably will be.
I do wonder if, we'll see in 3 to 5 years' time a lot of M&A exit activity around the dual use defense. I wonder if it will go kind of blockchain, AI, defense, cyber, unpack, whatever that all looks like, resilience tech, then you call it, Andrew. So it looks like that will be the next kind of big game in town in 5 years' time for the exit activity, hopefully. But Dilek, did you get a chance to read the report? Have you got any thoughts on this?
Just adding on your note, the biggest problem with defense tech was going to be the exit door for us. So there's definitely going to be a room and demand for it, but who's going to buy these companies? So,
Which is exactly what, chatting with a big LP in the US the other day, which is exactly the question she asked me. So clearly it's on the mind of LPs. And, Andrew, you've talked about this before, and you invest in a lot of defense tech. What do you think?
I think there are some big things happening which will help keep the momentum fueled. You stated the biggest one, right? AI, that's not going away. It'll take time for the companies, even if they are basket cases in sort of generative AI, to die anyway. So we've got a sort of 2 to 5 year window when all these companies are going to look rosy, and in about 3 years' time, we're going to realize that their lunch has been eaten by
Andrew,
XAI or
stop.
OpenAI.
Andrew, I asked you. I'm sorry, you have to cut this bit out. Listen, what I asked you about
You need to let me
defense
finish.
tech exit.
You need to let me
You're not
finish.
listening to
Let
me.
finish. But AI is such a big, it's such a big wave that we're going to be riding it for the next 10 years. This isn't just something, that is coming out
Not
in 2 years.
rappers
It's
though,
gone
Andrew.
and done.
Surely not the rapper stuff. We're not.
No,
I mean,
I think what's going to happen is the technology will keep accelerating. Some of these new chips will come out. Quantum's going to come of age, and that will keep the momentum going. So I'm not necessarily sure these cycles always look the same. I mean, if you think about when Web 2 peaked, it was much later than you might have thought it would be if you were sitting at, in 2002, you were in sort of 2007, and you were probably thinking, oh God, this is, this is peaking. This is huge. There's huge things going on. You've got like Facebook growing fast and everything else. But actually then wind forward to 2017, and 2007 was just the start. So I think that's where we are with AI. We're going to see this, it's not going to be that a bunch of generative AI companies die and then the money leaves, because there's going to be so much excitement about what's coming down the pipe. Defense, completely agree with you, Lomax, driven by that 800 billion, the increase in defense spending does depend a little bit. Will there be peace in Ukraine? How will that affect defense spending? I still think that most governments cannot ignore the way that warfare has changed. So they all need cheap munitions. They all need cheap drone countermeasures. They all need swarm drones. They all need, all this stuff. A lot of that could help prevent a recession. And I think the only thing that one of the biggest levers that will dictate our industry is interest rates, because there are these big fast growth industrial area, being affected by AI. I mean, it's underpinning change in healthcare, the renewable energy. And we only need one sort of really big breakthrough technology to suddenly come of age, which could then double down on this acceleration. Imagine if one of these fusion companies actually produces a bloody commercially viable fusion reactor.
Coming,
and,
baby.
You know, the price of energy drops through the floor. Or, you know, our wonderful reverse computing company, when they launched their chip, and it's actually, you know, the cost of energy for data centers drops through the floor, etc. So I think it's super exciting. I'm still bullish.
I think we're going to solve energy, but I want to talk about Turkey, and I want to talk a bit more about the Turkish ecosystem, because we don't, and it's because obviously we're London centric. I know the guys are in Lisbon and you're over in Turkey, Dilek, but we don't know much. It's not really talked about in the UK press. There are so many regions across Europe, and I know it's not, but I do include Turkey in that grouping. The Scandies, obviously the Dutchies, the French, the Germans, the Spanish. There's a lot of noise now coming through. But tell us about Turkey. Give us a little bit of a brief history, maybe a bit more about you and how you got into this crazy world, and then what it's like over with you.
I got into venture 12 years ago at the first venture capital firm in Turkey. Imagine that's just like 12 years old. But the thing is, when I first started, it was like $10 to $20 million investment per year. Now, the last year was 2.6 billion. After
Nice.
2018, the first $1 billion plus exit peak games, that changed everything. In every book report we talked about today, it was talking about the talent and mafias. I call them spillovers. Now I see so much spillover effects in the ecosystem. Peak games alone by itself created like 80 startups. Getir created almost 100 of it. So I think it's like a really big inflection point. The biggest difference when I started and now, it was only local. I think that's why you didn't hear that much. But for the last 5 to 6 years, we have more high-tech stuff, cybersecurity, defense tech, AI, B2B enterprise software, not just B2C companies. You see them going global from day one and creating category leaders. So I think that's a big change. Obviously, if you talk about Turkey, you never stop talking about gaming. And gaming is a big thing, obviously. Fintech coming up as a big success stories. I think the next generation is all about defense, cyber, and AI companies.
So Dilek, what's the reason gaming was or is so big in Turkey? Is that a cultural thing? Was it happen chance? Was there one big company that spawned lots of others?
I'm crazy about those stories. By the way, the best book I have ever read is The Power Law, about the Silicon Valley's birth.
Yeah.
So everybody should read about who's interested in ecosystems. That was one company that made the biggest change. They thought big, they didn't stop, and they created a big company, sold it to Zynga. No one thought about it before. And after that, they said, oh, it's easy. Actually, Dream Games came out of it. In a shorter period of time, they became $3 billion company. So you see the spillover effect in the success stories over and over again.
Our conversation earlier about just how important these bigger companies are, the impact they have.
the
Yes.
recycling.
Yeah, I love it when they also invest the people who came out of the company, the founders of the original company, invest in them and help them, coach them, and invest them as an angel. That makes a big difference too.
Do they stay, Dilek? Do Turkish founders stay in Turkey? It's one thing selling global, and I'm assuming there's a local market, and then there's obviously the foreign market. But do they stay? Do they go and come back? How does the ecosystem work from the founder perspective?
So if you look at different categories, let's say for fintech, Turkey was one of the best banking systems because the best students of this country became bankers. So that's why we created really good banks. But then fintech became really strong. And now they go and buy companies in other markets. Just to give you an example, on the gaming side, they stay here. They have so many good incentives from the government if you are a gaming company. So, but they sell all around the world, or apps too. But if you're a B2B company, you see they're mostly going to US, and you see so many success stories coming out from Silicon Valley. But to be honest, I cannot say they only move there. It's just like the Israeli ecosystem. The founders or GTM goes to US because that's the biggest customer base they can sell. And then the talent pool stays here or wherever they want to grow. Defense tech, it's different. It's all here. So Bayraktar is
okay.
growing really fast. So if it's B2B, they go where the customers are and where the money is to get the next funding. Because it's still, if you look at the Series B, there's a big gap. Turkey is the fastest growing early stage market in Europe. And number wise, it's number 2. So it's a pre-seed to seed market now. But if you go up to Series A is still good, but the B's there's a big gap.
Yeah. Okay.
So sort of pound for pound, dollar for dollar, it must be one of the best markets in the world right now.
Definitely one of the...
Up there with Israel, Sweden,
it was
kind of thing.
3x cash on cash, what you invested plus the exit volume. It was more than 3x last time I checked it out.
What about at the fund level?
Fund level, Turkish funds are doing so well. Early Bird East won 15x, phenomenal performance came out of this market. UiPath, but Turkish fund managers. The other funds are doing really well too. I mean, my first fund was doing really well after 7 years. So you see the success is coming out after the maturity comes, because it was just 12 years old. After 8 years, you start to see the exits and the success stories.
And where's the LP money coming from?
Believe or not, EIF was one of the biggest LP investor in Turkish funds. Yeah, lots to watch
Lots
out.
to watch
And
out
also,
for in Turkey.
definitely.
Is there any opportunity for any founders across Europe to build in Turkey or to raise in Turkey or to do something specific? Is there anything that founders should be international founders should be thinking about when they think about the Turkish market on any level?
Definitely the talent level. Really young, high quality engineering pool, number wise. I used to invest in companies in Turkey, but they would go global on the B2B side. Now what's happening is they are already in Silicon Valley, but they build their talent pool here, which makes a big difference.
Yeah, it makes sense. It sounds like you've taken that mantle, because Poland is now as expensive as London pretty much. But it feels like that maybe there's a Turkish opportunity to kind of build and do.
And Dilek, you're investing in both in Turkish companies and Turkish diaspora, is that right?
Yes, I mostly invest in Turkish diaspora.
And there's some phenomenal Turkish founders. Billion to one is a Turkish founder, right? Isn't it? Is that right?
Billion to one, BioNTech. There's so many phenomenal. And Fall lately, Insider actually, which I invested way back ago, just raised 500 million from General Atlantic in 25 countries. So you see so many companies popping up and creating global success stories.
Right, let's move on to deal of the week. So Dilek, you've got some deals that you wanted to kind of bring to the table. What's on your docket?
So mine was Incident.io. Why? Because of my co-founder, probably. I heard from him all the cycles of incident management whenever technology changes. And it was shocking to hear. Every time the technology changes, there are still so many successful companies popping up in the incident management. And Incident.io, 4-year-old New York and London startup, just got 62 million Series B. That was eye-popping for me. Still, we have incident management companies.
Who doesn't have incidents? Lomax, what was your deal of the week?
So 2 exits. One quickly was the ending of a kind of behemoth Frankenstein's monster of various ride-hailing apps over the years.
Are they still folding in on themselves?
You'll remember Halo in London, and My Taxi in Germany ended up being free now, which has just been acquired by Lyft for $200 million. I mean, those companies must have raised way more than that over the years. And I think I saw an article recently. This was owned actually by BMW and Mercedes. When they put it on the block, they were hoping for an exit price 3 times that. So it's a bit of a kind of limp, damp squib of that saga there. But interestingly, very hot off the press and very relevant for today's discussion is the exit of Runner, which is a 4-year-old UK running app, which has been acquired by Strava. Runner has been on an absolute tear from what we know, what we can glean from private sources over the last few years. Was named the top 3 apps in the App Store last year. I think had scaled to tens of thousands of users, probably tens of millions of ARR. Had raised only 10 million from some of our friends, both angels and early stage VC funds, Eco Ventures, Creative Ventures, but has sold, curiously, We don't know the number. I'm guessing a little spy who's not involved with the company has suggested it may be in the 250 to 300 range. And this is actually a curious one in the context of our discussion earlier, is here is a company that had cracked a very difficult format. So, B2C is notoriously difficult at the moment, that seems to have been on an absolute tear and has suddenly sold out. No doubt the young founders have made an absolute mint because they would have taken very, very little dilution to get to this point. But, surely if this company was doing so, what wouldn't you want them to crack on and build a big business? As a GP, I'm thinking, if this is one of the winners in my portfolio, I'd want them to crack on. So I'm conscious that we don't have all the details here, and they may have been offered a fantastic offer in all cash, et cetera, but I mean, probably a bit disappointing, right? If we could see a company that could have grown like Synthesia, we talked about earlier, to, into the hundreds of millions of ARR, or maybe they saw a cap on their market, or they saw something that meant that they needed to take this exit option. I'm curious for your guys' thoughts, but interesting and good to get some liquidity back in the system, but yeah.
Depends on the unit economics and depends on what they're going to happen for their growth. Maybe they knew internally what was, that they were going to have challenges growing to the next inflection point. Every time you take a funding round, you got to sort of sell for 3, if not more times more than you're worth today. Yep. That's a long journey, right? Adding another 2 years, you're adding a lot of risk. So depends on the reason they purchased as well.
Maybe they want to go again. Maybe with AI and all these new tool and availability and this ability to kind of spin things up, maybe the founders want to do something else. Who knows these days? Maybe it's not 1 all the way. Maybe it's 5 part of the way, and enjoy the variety and keep spinning up and keep going for it.
So let's congratulate these dudes. I think it's an amazing thing, and good to them. Good for them.
Yeah, absolutely, and a lovely success.
And
story.
maybe they create so many new companies by investing in the
yes.
younger entrepreneurs.
For sure.
Maybe I should go and pitch them my fund. Yeah.
The circle of life, baby. The circle of life. Andrew,
exactly.
What's happening with you this week? What are you up to?
Well, it's Easter.
Chocolate, baby, with the babies.
Yes.
I'll be on an Easter egg hunt, no doubt, on Sunday. Or rather, my son will be. And then
you won't be on it. You'll be setting it. Yeah.
Yes.
And then my evening will be horrendous as all the sugar hits and he has the sugar crash.
Snaffling on the way. Dilek, what are you up to this week? Have you got any big plans this weekend or next week?
The big thing is happening is an intern that I used to work almost 13 years ago. I'm just investing in his company now. And I realized this is such a long-term game. And I've been talking to him a lot, and he was helping me for due diligences. And seeing his companies at an inflection point, that blown me away. You never know who are you going to partner with.
What a lovely story.
Yes.
What a lovely story.
Amazing.
Lomax, what are you up to? Are you chocolating? Are you out and about? What's the score?
Yeah, Easter. I'm actually about to dash to the airport to pick up a shipment of drugs for me that has come from one of our portfolio companies.
You might need to qualify that. Just saying.
Cancer drugs, that is. Cancer drugs that's come from actually one of our portfolio companies. So that also is like, you never know who's going to help you out. And I never know that when these guys pitched me initially that they might actually be saving my life. So I'm going to be dashing off to... I know. I'm off to the logistics terminal at Lisbon Airport in a minute. But otherwise, it's going to be Easter egg hunts and overindulgence, I would have thought, this weekend.
Yeah, no, same. Hopefully the weather will hold in. I'm just south of London. Hopefully the weather will hold here. And yeah, we'll be hunting Easter eggs in the garden. Thank you so much, Dilek. Thank you so much to you for joining us. Thank you for breaking the wall of white dudes. And thank you for being brave enough to join us. That's
was a pleasure.
You rock. Guys and girls, see you next time.
Ciao, ciao.
Bye.